Okay, I'll just share the Excel only. I'll show you here. Um, all right, here it is. Here is the solution I have in front of you. Now tell me, where have you made the mistake? Now look at this third method calculation. Okay, current asset
Hmm.
is 90 to 62 500. You deduct the
Hmm.
core current asset and you calculate the real current asset is 78 to 62 500. Did you calculate that?
Yes, I calculated that.
25% of that comes to 19565.
Oh, I didn't do that.
Oh,
I just subtracted it from
oh,
working capital.
no, 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 no. You calculate 25% of that, and in the meantime, also tell you from this real current assets, also deduct the current liability. That will give you the working capital gap. That will come to 57, 637, 500. From that, the 25% that you have calculated, you deduct that value, then you will get the MPBF.
Oh, I got confused. Why we are taking current liabilities here?
Because
Because it.
current liability is general, no, that we are deducting for calculating the working capital. Normally, from the current
Working
assets, you
capital.
deduct the current liability. Here, the difference is about the core current assets. Am I right? Here, the
But
difference
here,
is about
why are we taking current liabilities in picture? We already have the working capital with us, right?
no, 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 no,
So
no.
we
That is no, 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 no. That is real current asset. That is not working capital.
mm,
That is real current asset.
correct.
That is different. So if you'll ask me, I'll tell you a little bit more detail about it so that no, you can avoid that confusion. What is core current assets? If you ask me, that's the best question to solve that confusion. Core current asset is basic assets that are required for your day-to-day operation. Suppose raw material, suppose basic stuff to convert the raw material to finished goods, and a few other stuff, so which is absolute necessary for a business to run. What the bank says is those assets, those current assets which are absolute necessity for your business, we are not going to fund that. That is your
Mm,
responsibility. So they call it core current assets. From the name also you can connect it to the concept, right? So they say that we will not consider that for the funding purpose, so they deduct it from the current assets. So your real current assets becomes a revised amount. Am I right? But the rest of the calculation remains same, similar to how you were deducting the current liability earlier. You also do that. Am I right?
mm,
Yeah.
in the first method also we didn't. I mean, second method we didn't deduct the current liability, right?
No, you
We
did. No, you
just
did. No, you did.
calculated 25% of current asset, then we have deducted that from working capital.
So when you deducted from working capital, how have you
Mm.
calculated the working capital?
That is there. That we
Yes.
have
Ulti-
deducted current liability, but we
ultimately, if
have
you
the.
please go ahead.
Sorry. So I was telling we have the amount already calculated in the first part, right, for the working capital. So we
That is
don't
all
have
right.
to.
No, no, no. Yeah, yeah, that is all right. That is all right. I got that. But you talk about the ultimate effect. Okay. Ultimate
Mm,
effect on the MPBF. Is there effect of current liability or not?
right, it's
There
there.
is, right? It's definitely
Mm,
decreasing the MPBF.
mm,
Similarly, here also it will decrease. Here,
mm,
what happened was we cannot use, or if you want to use, you can use in Cell's way. What Cell does
mm,
is he calculates the promoters, sorry, 25% of the core current assets. He adds
mm,
that to what do you call it? 12 1.2 crores, that is core current assets. He deducts
mm,
this value from the working capital that you have. You can follow that way also, or you can also go for, like in my way, the way I'm doing, I'm just following that same
mm.
format. That's easier to remember also once you practice a lot of times. You calculate the real current asset, then you deduct the working capital, because here working capital is not yet deducted.
Mm.
Once you deduct the working capital, you will find a revised working capital gap. From that you deduct the 25% one. That is also fine, which is done here. If you can look at it, I have deducted the working capital here, and my working capital gap comes to 57 637 500. Then promoters contribution I'm deducting, then I'm getting the MPBF. But either way, working capital will always be deducted, net effect will always be there. Is just the question of whether you will use the already net working capital that you have in your hand, or you want to recalculate the whole thing. Are you getting my point?
Mm.
Yeah.
Yeah. the I got this promoter's contribution.
Yeah.
So after that, what is the step? I
The
didn't.
self way you mean, or
Yeah.
this is, or in this way only?
In this way.
In
In
this
this
way.
way, which you
So
are
once
displaying. Yeah. I got
you,
1956.
awesome,
Yeah.
awesome.
That.
Now, you first of all, deducted the core current assets. You have already calculated the real current assets. Am I right? 78
Mm.
to 62.
Yeah.
Now
Yeah. So,
now from that you deduct the current liabilities also.
mm.
Then you calculate the working capital gap.
Uh, I'm getting confused. Sorry. I'm
No problem.
going with with the way you were telling. I will take current assets and then I will deduct the core current assets. Then
Okay.
I will take the 25% of that one, which is
Yes.
real current asset,
Yes. Yes.
and then I'll deduct it from working capital.
No, 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 not just that. No, no, don't do that.
Huh.
What I'm saying is, you have already calculated the core promote. Sorry, 25%, right?
Yeah,
Keep it
calculated
separately.
that.
Keep it separately. Now do a fresh
Mm.
calculation. Okay,
Mm.
in the fresh calculation, you start from the real current assets. You already have the real current assets with you, right?
Yes, I have.
Have it noted somewhere. Real current assets this much, less
Mm.
current liabilities.
Okay.
Current
Minus
liabilities is
current.
2625,000.
Huh.
That comes to 57,637,500, right?
Just doing it.
Yes, yes.
Yeah, 57637500.
Perfect. That, call it as working capital gap only.
Okay. This
Yeah.
is only for the third method, right?
Only
Or
for the third method. Only for the third
okay.
method. Then
Okay.
from this you deduct the promoter's contribution that you calculated earlier. That is the 25%. The other one which I
25%.
told you to keep it as a for the I mean keep it aside. I told that is 19,565 625.
Huh.
Is that okay?
Yeah.
Now you deduct
38.
that. Yes,
Yeah.
that is your MPBF.
Okay.
Now it's just addition and subtraction. You analyze and tell me, take your time, analyze and tell me
Mm.
what exactly is different in this method and the other method. There is something different, right?
Yeah.
So because that's something different, I'll give you a hint. If you analyze the working
Mm.
capital gap, you will get to know. Working capital gap is same in method one, method two, but it is different in
Mm.
method three. If you get that, no, you'd be able to avoid that confusion that is happening right now. Is that okay? You can also practice few other questions that will also
Mm.
advantage you. Other questions that we have already done it. I think we have already done 3 questions now, including this one. So
Okay.
you can practice those by your own, on your own, and I think that should make it clearer.
Okay.
Yeah.
So this MPBF abbreviation is
Maximum permissible bank finance.
okay.
Yeah.
And total promoters contribution we are calculating by deducting it from the promoters contribution, is it?
Total promoter contribution will not be asked in the question. Okay,
Uh,
it's just for the purpose of knowing what exactly is happening. That's why we are doing
mm,
it. So if you look at
okay.
it, in the first one, 52 to
Mm.
28 125 was the amount of bank finance. Then how much are the promoter investing, how much is the owner investing? You simply deduct this value from the working capital gap, isn't it?
Mm.
Working capital requirement was 69 637 500. You
Mm.
got finance of 52 to 28, right? That will give you
Yeah.
7409. Similarly,
Uh-huh.
if you do the
Mm.
same thing for the rest of the methods, you will get the promoter's contribution.
Mm. Okay. So this is not needed in the exam for the
No, it's
this
not.
final step?
Just for knowledge
No.
purpose, you can just have it in your mind. Just look at the trend also. You can also compare between all these 3 methods. Which method is the promoter investing the most? It's the third method, right?
Oh,
Yeah.
okay, okay, okay. Got it. Oh, that's why you
So
have written.
yeah, yeah. So in the third method, the bank is not relying the promoter so much. So he's asking
Mm.
them to invest more, basically.
Mm.
So
Mm.
and then you can compare, and banks have the option to choose any method as per their requirement, own requirement. Is that okay?
Oh, yeah. Got it.
Awesome,
Thank you.
awesome. Yeah, no problem. Okay. Any other things that you guys want to discuss? Otherwise, we'll move quickly to WACC. Okay. I'll move. All right. So here is the WACC. We have only two questions. These two questions, Sir has done each question twice in the class, and both the times he has told both these questions are as important. So I'm pretty much sure right now that these questions are to be given as is, or maybe some values here and there changes will be done, and the revised question will be given, but in the same format. WSC is very easy. Slight concept is there. A very small trick is there. I'll just tell you those tricks first, and then we'll move to the questions. First of all, suppose uh, suppose forget about the WCs, forget about the concept. We're just knowing the methods, knowing the tricks to understand how to solve the question. I'm not focusing on anything else right now. So I'll give you a small example right now. Suppose personally you have two loans. Okay. One loan is of 10,000 rupees, another loan is of 15,000 rupees. First loan interest rate is 5%, second loan interest rate is 6%. So 10,000 one loan, 15,000 another loan, 5% the first one, 6% is the second one. Now, I'll ask you one question and you answer me. What is the final percentage that you are paying? What is the final percentage of interest that you are paying? Can you answer me? Very, very simple example. One loan you have 10,000, another loan you have 15,000. First loan is 5%, second one is 6%. I want to know what is the final percentage of interest that I'm paying. They call it effective rate of interest. Then the technical name of it is. What is the effective rate of interest that I'm paying because of both the loans?
Will we add the interest 5 plus 6?
You take a call. I'll tell either way. You take a call and you tell me the interest rate. Imagine as if you are also taking the loan and you are paying the amount. What is the effective rate of interest? What is the final rate of interest?
So we'll first sum up the whole thing, the number,
Okay.
and calculate the weighted average, right? First,
Yes.
out of 25,000,
Yes.
which we are having,
Yes.
20% is coming with 5%, and this one is coming at 6%.
Okay. Yes.
You will have to calculate the.
So are you saying you will do this, what I'm doing right now?
Yeah.
Okay. And then you will do?
Then we will. Then 25, that will define the contribution for each one of them, right?
The
25 into 0.4.
25 into
That'll come to
0.4 will give us 10,000 only. Yeah.
10,000 only. 0.4 into 0.5 and
Okay.
0.6 into 0.6.
Okay.
That's into 6%.
Yeah.
And then sum total of this should give us
5.6% it comes to.
5.6%.
Okay.
Yeah.
Yeah. You are absolutely right. But I want others to tell me one more method is there. Simpler method. Not this not this complicated. I mean, this is not complicated, but still.
We can calculate individual things.
Yes. Yes. Now,
Yeah,
now
easily.
tell me what is the interest that you will pay for the first year in the first one. You simply multiply the interest rate with the amount, right? That comes to 500.
100.
Yeah.
The second one will come to 900. Am I right?
Yeah.
900, yeah.
Total interest you are paying is how much? 1400.
1400.
So you have taken a loan of 25,000 total and you are paying a total of 1400. What is your effective rate of interest? You simply do 1400 divided by 25,000. See, exactly same. So the whole purpose of WACC is exactly what we did right now. I just wanted you to get familiar with what we are doing with WACC. In WACC, we are just finding out a net total cost of capital, which can represent our whole company. whatever source of capital that we have, we want to know what is the net amount of cost of capital which is representing our whole company, similar to how we did right now. Is there any doubt in this example? I think it should be clear, right?
Yes,
Yeah.
it's clear.
Yeah, as Dheeraj.
Awesome, awesome. Now, in the method that Cell did you guys get that? How he did that? The one with the interest calculation seemed very simple. This one seemed slightly somewhere, something else is happening. Did you get what happened really?
No, no, I didn't understand that method.
Okay, no problem. I'll tell you. So, what is happening here is, these two methods, the major difference is with the ratio. In the first one, we are not taking the ratio at all. We are simply calculating in a very simple way. Now, forget about that. Let's talk about the other one, where what happens is, when you look at the interest rates, when you multiply the interest rates with the base value and you add those values so that you can calculate the effective rate of interest, ultimately that amount plays a big role, isn't it?
Mm.
This amount, this 15,000 and 10,000 play a big role. if i say
Yeah.
if I say, you know what, I want to calculate the effective rate of interest, I'll simply do 5 plus 6, 11%. Is this correct?
No.
No, it's not correct. I'll tell, no, no, okay, fine. If it's not correct, I'll do this divided by 2. Is this correct?
No.
Because
No.
there are two loans, I'll simply do that divided by 2. Now tell me why this is not correct. Why by doing divided by 2 I'm not getting the answer?
Amount are different for two
Exactly my
loans.
point. So amount plays a big role. So the ratio of amounts, had this been 10,000 only, had this been 10,000 only, this way would have worked. I simply add those and divide by 2 because amounts are same. Am I right? So amount plays a big
Yeah.
role here, which means the ratio between the two has to be taken into consideration while calculating this. How do we calculate ratio? Make a total of that and calculate the percentage of individual values to the total. So zero point 0.4 is nothing but 40%. Zero point 0.4 is nothing but the 40%, which is 10,000 divided by 25,000. 0.6 is nothing but 60%, which is nothing but 15,000 divided by 25. You multiply those ratios to the rate, that is 5% into zero point 0.4 and 6% into zero point 0.6. You add those proportions, that will give you the WACC, because in that you have already considered the ratio of the values also. Is that slightly clearer? We'll be practicing questions, that's not a problem. We'll be revising this again and again. Is that okay?
Yeah, as Dheeraj.
Yeah, we'll be revising it right away, no problem. um, One more thing that I wanted to discuss, this concept is not there in these questions, okay, but sir has discussed this in detail, so I just wanted to cover this so that in case he does some here and there changes, no, and he definitely can, by just changing one simple word, this question can be even slightly more difficult. I'll tell you how. Here is the concept, okay. I have one example uh, of a company where the net income after everything, after depreciation, after tax, you have the net income of 70,000. You have the net income of 70,000. Now I have one option. One guy came and told that, you know what, I missed to deduct something. He told, I missed to deduct something. I had a loan of 50,000. We have paid interest at the rate of 10% of that. I totally missed to deduct that amount from the value. You tell me, what should be the revised net income? I'll tell you the question once more. You have the net income after tax, after depreciation, after everything, that is 70,000. I'm telling you, we have missed to report something. We have missed to report one of the loans that we have, and we have paid interest on it. The loan amount is 50,000 and the interest rate is 10%. You tell me what is the revised net income?
So 5,000 will be the interest total,
Correct.
but we cannot just deduct it from net income, right?
Mm-hmm. Okay, and why is that? That's the whole logic of this
Because
exercise only.
yeah, because the expense or the tax rate for this will be slightly different when you multiply it with this into the expense into this. Maybe your taxes would have been less.
When you do expense into this,
Suppose
okay.
when we
Yeah,
have
yeah, no,
EBIT,
fair enough, fair enough. Yes, fair enough. Yeah, go ahead, please.
so EBIT,
Hmm.
from EBIT, when we deduct the interest,
Yeah,
there is certain amount which comes and we pay taxes on that,
correct.
not on the this. So we cannot just deduct 5,000 from 70,000.
Okay. How much would you deduct then?
Then we'll have to first multiply it by the tax, go back to what my EBIT was,
Okay.
and then calculate it.
Okay. What just Shell shared? Did you guys understand? Josie and
No.
Ashwati? Okay, no problem. Can you tell me a number right now? Having given those information, 70,000, 50,000, 10%. You tell me a revised income. Revised net income.
But what was the interest rate? We
10%.
don't know.
10%. Right now it's 10%. Yeah. For 50,000
It is interest, tax rate. Tax rate.
Okay. Tax rate, let me give you 30%.
Okay, let me try that.
Yeah.
So we have 70,000 as income.
Yes.
5,000, 50,000 is what we did it at 10%.
Yeah.
And tax rate is 30, you said, right?
30, 30, yeah.
Yeah, 30%. So what I will do is I say this slash 100.
Dheeraj, maybe I'm wrong, but I'm not understanding the whole concept. We
Yeah,
have
1 minute. I think we let
We
me
have not,
give the
Ashwati,
details.
we have not discussed the concept yet. I'm just
not
giving you
that.
example. Yeah, go ahead.
Example, we are taking a
Yeah.
loan of 50,000. Will not that get added to 70,000? Because that will be our total money in hand, right?
No. Loan is not
So,
an income, right?
Dheeraj,
No, it's not
Yes.
an income.
1 second, Ashwati.
so
Please.
70%, if I convert back into 30%,
Yeah.
I get 1 lakh as my income.
Perfect.
From 1 lakh, I deduct 5,000, which is
Yeah.
95,000, then
Perfect.
pay 30% of that, 28,500,
Perfect.
and my net income becomes 66,500.
Perfect. Then, Marcel, my question to you, before I move on to others, just you think about it for a second and you tell me later a little bit. Okay. What is the difference between the net income right now?
30,000.
No.
No,
Difference
when
between-
earlier in 2000,
Yes,
3,500.
What was the
3,500.
expense that you added?
5,000
You added 5,000 expense. Your net income.
sorry, I reduced 5,000.
Your expense basically increased by 5,000, right? Your
My
net income
expense
decreased.
yes.
Your net income decreased, however, by 3,500. Your expense
Yeah.
increased by 5,000. Your net income decreased by 3,500. Why is that? Why is there a difference? Just think about it. Let me just address Aswiti for a bit. Yeah.
So, okay, you can do.
Just give me
I'll
1
tell
second,
you
because
later.
let me also bring them to here.
Sure.
So that we can have that discussion further. Yeah. Aswiti, 70,000 is the net income. Am I right?
Yeah, right.
50,000 is the loan. Loan is
Okay.
not an income. Am I right? Because we have to pay it back,
Correct,
no?
correct.
Yeah. We
Yeah,
have
correct.
to add that as an income. However, on that loan, whatever interest that we are paying, that is expense.
So that is deducted from the income.
Yes, that is correct. That is deducted from the income. Now, what I
Okay.
was asking was, now that you have the net income of 70,000, your loan is of 50,000, 10% is the rate of interest, and tax rate additional information is 30%. I want the revised net income.
So it should consider the tax before tax amount as well.
Logically, what do you think? Should it consider, or should we deduct the 70,000 minus 5,000?
It
How I
should
got the
deduct.
5,000, you got it, right?
Yeah, yeah,
Yeah, yeah.
yeah.
Should we do 70,000 minus 5,000?
And
Or is there an issue?
no, because we have to see the amount before tax and then deduct the 10%
Why
maybe.
is that? Why is that? Why is that?
Because it's from the total amount I'm having, I'm giving it for the loan and also for the tax, right? Maybe because of that.
No, so you're not sure, right? That's what you're saying?
No,
Okay,
yeah.
fair enough. Josie, are you able to connect with until this point?
Yeah, yes, Dheeraj. No, I would have done 70,000 minus 5,000.
5,000 only. Yeah, I'll tell you why.
Yeah.
Okay, because we'll start from there. I got it. Where you are stuck, I got it. We'll start from there. Why we will be deducting? We will not deduct 5,000 directly from 70,000 is, as I said, it is after tax also. Now that you have a new expense, your taxable income is also changing. Am I right? Your
Yeah,
taxable
right.
Yeah.
Because
income is
your
also changing.
loan,
Exactly. Now that your taxable income is changing, your tax will also change. Am I right?
yeah, right.
Your tax will also change. Now that now that you know, not just one expense, there are two things those are changing. Do you agree with me?
Mm.
One is interest, one is
Tax.
tax. Both are expenses only, but both are changing. Because of one change, there are actually two effects. So you cannot just simply deduct 5,000 from that. Do you get my point?
Yeah.
So because of this, there is an ultimate effect in the tax also. That's the most important reason for which you cannot deduct 5,000 directly from the 70,000. Now, how do we move forward? How do we move forward? You have 70,000 as your net income. Okay. Now your tax rate is, I told, 30%. Can you tell me what was the taxable income before tax?
So we have to add 30%.
No, not
No.
necessarily. Not necessarily. Just think about it a little bit. What I asked was net income after tax is 70,000. Your tax rate is 30%. What is the net income before tax?
So you'll have to subtract 21,000.
Subtract 25,000.
30% of 30% of 70,000 is 21,000.
No. I'll give you a simpler example. Okay, fine. I got it. I got it where you're stuck. I know this is slightly tricky, so I'll tell you the logic. Forget about this example, okay? Totally forget about this example. I'm giving you 100 rupees as selling price. One product, selling price is 100 rupees. I'm telling you the profit on that product is 25%. Profit is how much? 20, suppose 20%. Suppose 20%. That comes to how much?
20 rupees.
20 rupees. Then what is the cost of that product? How can I calculate?
100 minus 20.
100 minus 20. Aswati, are you with us? Yeah?
Yes, Dheeraj, yeah.
Yeah. I'll ask you one more question. What is the percentage of the profit on the cost? What is the percentage of profit on cost? How will I calculate that?
80 by 100.
No. What is the percentage of
No, I didn't get
profit?
you.
What is the percentage of profit on cost?
No, what you have given is 120 is profit on sales,
Yeah.
right?
Yes.
Now he's asking is profit on cost.
Profit
So
on
if the
cost.
cost is
So
X and
20% of 80.
No. What I'm asking, I'll repeat that question. What is the percentage of profit on cost?
Okay, it's 20 by 80.
Absolutely correct. So that comes to, I'm writing it separately. Aswati, did you get that? How we did 20 by 80?
Yeah, I got that. I was thinking about the other thing only.
Okay. Now this becomes 25%. Okay. Now this becomes 25%. One profit percentage you have 20%. One profit percentage you have 25%. My question to you is, why are these different? Can you tell me how can in the same scenario 2% can be different for the same value. Profit only we are calculating. How can the percentage be different?
But one we took 80 and one is 100, no?
Exactly my point. That's exactly where I was reaching to, because the base is changing. Am I right? So whenever you are calculating a percentage, the base is very important. Is that right? I'll give this question in a different way to you right now. Same example, just think about it from this perspective. Suppose I give you the cost in one scenario is 80 rupees. Cost in one scenario is 80 rupees. Profit percentage on sell value. Profit percentage on, what did I say? On sell value is 20%. Can you tell me the selling price? What I told was cost is given as 80 rupees. Profit percentage on sell value is 20%. Can you tell me the selling price? How will you calculate?
Is it 96?
No. Just look at the above example. I have given the same data. How can you tell 96? Can you look at the value? Both are same only. Cost in the last example, in the above one, we have given cost of 80 rupees. Profit percentage is 20%. In the same example that I've given, can you look at it? Selling price will be 100,
Yeah,
no matter what. But how will you
100.
calculate? But now question is, how will you calculate?
80 divided by 0.8.
Yes.
1 minus 20.
Yes. Josie, did you get it?
No, what is that? No, I didn't get that.
So
Detail.
what happens here is, now that this 25% is not given, okay, only 80 and 20 is given. The logic is profit percentage is given on sell value, not on cost. So the base is given differently. That's what I meant to say when I said, base is very important. Which value, on which value the percentage is calculated is very much important. This 20 is calculated on which base? Is simply
Selling.
profit divided by sales. Am I right? Because it is profit percentage on sales. So I cannot multiply this with cost. Do you agree with that? Or are you having any doubts there? I cannot multiply
Correct, I got it.
cost
I understood.
because this is calculated on sales. Now, how will I calculate then? Now that you have got it, tell me a logic in which I can calculate that.
Basically, 80% of the value is 80% of the sale price.
Yes.
That's why we are getting 20% as a profit.
Yes. Yes. That is absolutely correct. I want them to understand. Look at this. Look at this.
See,
Okay.
when you work on margins in service industry, you know this.
Exactly. This is very common. Once you actually get familiar with it, then it seems very simple. But for the people who for whom this is very new, it seems very difficult. That's why I wanted to focus on this. I can see they're facing challenges here. I'll Josie, Aswati, I'll just change the numbers a little bit. Okay, I'll make this number 160 now. I'm saying cost is 160, profit percentage on sales is 20. I want to calculate the sales value. Is that okay? What I'll say is, if the profit percentage is 20%, what is 80%? I'm asking you, what if profit percentage is 20%, what is 80%? Can you tell me what is 80%? Cost, that is incomplete. Cost percentage, am I right? Cost percentage. Cost percentage is, I did what? 100 minus 20, that becomes 80. Now, cost percentage formula, if I'll tell, can I say cost divided by sales?
Yeah.
Is that okay?
Sales, yeah, correct.
Yeah. Now that I have cost divided by sales, also the value of cost also I have. Can I calculate sales now?
Yeah.
I have cost value. I have cost divided by sales. I need to calculate the sales. You calculate and tell me how much is the sales, please. So one value you have, cost divided by sales is equal to 0.8. 80%, that means 0.8. And cost you have 160.
It's 225, Dheeraj. I don't know.
No, 2 to 5 is incorrect.
So one minute, cost percentage is equal to cost by sales.
Cost by sales, that is
So
equal to 0.8. Yes.
yeah, so 0 point is equal to 180 by sales.
160.
160, no, not 180.
40?
Yeah, I
Okay.
think I made a mistake there. Yeah.
Is it 40?
No.
Not
So it's
40.
200.
It's 200. No, 40 is incorrect, Aswati. How did you reach
40 is
40?
profit, right?
Okay, profit you're telling. Yeah, you're right. So
Yeah.
sales value, sales, I'm asking for sales value. Sales value is 200 only, right?
200.
Yeah, sales is 200 and profit is 40. Yeah.
Absolutely correct. Now let me give you one more example so that you get familiar with this whole calculation. Okay. Suppose, give me 1 second. Okay. Yeah. Suppose profit before tax is 300. Suppose profit before tax is 300. Tax is at the rate of 30%, comes to how much? 90, right? 90.
Yeah.
Yeah.
And your profit after tax is how much? 300 minus 90, that comes to 210. Yeah.
Yeah.
Now I'll give you PAT of 210, tax rate of 30%. You give me PBT. You give me profit before tax. I'm giving you the answer first, then I'm asking you the question. But you calculate that way. That will be easier for you. I give you profit after tax of 210, tax rate of 30%. I'm asking you for PBT, profit before tax. Just do it in the exactly same way. Okay. Tax rate, we said 30%. So if tax is 30%, what is 70%? Are you getting my point? So when I say tax rate, that means tax divided by PBT. Focus on the base. I'm keeping it as PBT. Did you get it? Why PBT? Because tax is always calculated on the profit before tax. So tax rate is PBT. Then what is 70%?
%70 is PAT.
Exactly my point. Absolutely correct. So if you give a name to it, it will be PAT divided by what is the base? PBT. Absolutely correct.
PBT.
So you have now PAT divided by PBT 70%. You have PAT 210. Calculate the PBT.
Yeah, it's 300. It's coming to 300.
Absolutely correct. Are you getting slightly tricky calculation is there? But once you get familiar with it, it doesn't really bother you anymore. Yeah? Just focus on these examples a little bit more afterwards. And if you want, I can give you a few more examples also so that you can practice on specifically this calculation. Because slightly tricky this one is. And trust me, we used to spend 2 months in this kind of questions in our 12th and 11th. 2 months specifically in these kind of questions. This is called specifically business mathematics was there. Their cost plus something, some chapter was called like that, and specifically this concept was discussed in the whole chapter. And so suddenly getting it, obviously I have to give you that benefit of doubt. If you want, I can give you like 5-10 questions like this.
I think
practice.
The problem is, I also had similar problems when I started it, Dheeraj.
Yeah.
The challenge is if we say something is 100 rupees
Yeah.
and I want to earn 30% margin on that.